All right, welcome everybody. Want to do a quick follow-up. I did this session on June 22nd. You can go to YouTube, our YouTube channel, and you can find that. And basically, I talked about tops and bottoms and strong tops and bottoms in this video. I did a little recap video on the NASDAQ, and what I wanted to do is just kind of do the same thing with crude oil for Friday the 23rd. And again, I'm going to use the same format that I used in the other videos. So if you haven't watched those, you may want to watch those first. But short version is we have termination condition, pivot stop out, and then we have strong triggers going down. And this box right here is basically the spot at which, things are rolling down on the large chart after a termination. And you can start thinking about short trades. Now, when we look at the chart, again, most of the time we're not really going to do short trades until both of the triggers on the smaller chart start rolling over, unless you're doing a momentum or a high volume area trade. But when we talk about trend trades, you're really waiting for both of these triggers on the 5-1 chart or your smaller chart to roll over. You can do it with one trigger, but that's not really the trend trade. Both of them is what we're looking for. And you can see after the termination on crude oil, the market went down. Very shallow pullbacks. And, this is a tough situation. Here's one spot with a 1-to-1 where you got a little bit of a pullback. Not very deep. Obviously, we'd like to see the mid bands or fibs or even 1-to-1s. Just didn't get a deep pullback, and that's okay. It happens sometimes where the market just goes without us. So what I'm going to do is I'm going to go forward until we get another good top or good bottom as highlighted by one of the boxes. And I just want to explain what the good top is. I mean, look, we've got a downtrend, serious downtrend. We did not reach fibs, so we don't have a really good bottom here. If you watch the tops and bottoms video. So we did bounce back up. We got up to resistance, mid bands, pivot stop out, or triggers roll over. And that's the spot where we'd start looking for short trades again. And we're not really looking for many long trades in this situation because by the time both triggers rolled over, we were already at resistance. So let's find that spot. And you can see this is the spot where, the two charts line up with each other. And again, when we get to resistance, we're not going short. And you can notice what happened on the small chart. We had 1-to-1s, we had mid bands, we had fibs. So this is where, again, I'm a fan. If you have a really good top and you have a really good idea that you're going to end up going to the next fib, I'm okay with momentum trades. And momentum trades are really simple. Small triggers are really strong. And you're selling a pullback to a mid band or a fib or a 1-to-1, with a relatively tight stop. You don't need to risk a whole lot of money on these types of momentum trades. But the key to a momentum trade is this look in the small trigger lines right here. As long as this small trigger line is vertical to the downside, you kind of get that momentum look. Not a trend trade, but a lot of people will sell a shallow pullback with the expectation that we're going to make it down to the next fibs. So if you did sell around 68.70, easily down to 40 and then easily down to the next fibs down here at 33. Quite a bit of money to be made there with a momentum style trade. Not really technically a trend trade, but that's okay. And then as we break fibs, obviously, we'll do more short trades if we get them. The problem with this and why there wasn't any short trades is by the time we actually got back to the first resistance, which was the mid-band over here, we weren't at the large triggers or the synthetic triggers. We were above them. So that's not really our trend trade rules. And you can see the market did end up going higher. Now, after it went up higher, we kind of broke out to the upside. And let me just show you this. Again, this is what it would look like real time. So, when you're watching the market in the real world on the right edge of the chart, you've got a really strong look up. you've got fib support. On your smaller chart, everything is up. So we would want to buy a pullback into the 39 to 33 window with the anticipation that we're going to go back up. And again, we got into the window, and this is just where you get stopped out. I mean, this technically right about there is the buy, and unfortunately, it just doesn't go. So, if you put your stop a few ticks below the pivot or even gave it a little more room below the 1-to-1s, it doesn't matter what you did, they got you anyway. And again, look, just because they didn't go up the first time doesn't mean they won't go up eventually. A lot of times they'll do, this. They'll try to go up the first time. We saw this in the NASDAQ when we did our review. We had a pivot stop out here at the bottom, and then the market obviously turns back up and goes back up to the upside here. So, again, this is where we're not necessarily going short as much. We're kind of waiting for the smaller charts to line back up with the idea of going long again. And again, this isn't the easiest of trades. Over here. And again, this ends up, excuse me. Again, you have to have a really good context on this. 3 divergences, pivot stop outs, lots of reasons to go up. And, this is another one of those mid-band slash 1-to-1 type momentum trades. And if you didn't get that, you didn't get anything. So again, having the proper context of a good bottom will allow you to take one of these momentum style trades, even if you get in a little bit late. Let's just say hypothetically you waited for some up bars and got in here. You still got divergence and higher divergence, even if you got in after the second divergence, way late. Still provides a really good opportunity with a lot of room to the next fib. Now, if you're not into momentum trading, that's fine. Again, the better the termination condition on all the charts, the easier your momentum looks are going to be. Now, as we trade forward, again, there's, we kind of ran out of steam. And again, where did we run out of steam? It's not really a mystery over here on the smaller chart. We ran out of steam up here at the top where we had pivot stop out at fibs, termination condition on the small chart, and the market obviously turned to the downside. And again, the ideas were may trade back to fibs, and, was there a trend trade to be had? Again, maybe one trend trade where everything came together at the exact same time at the same spot. And again, if you did this trend trade, you have to do it in the context of we bounced off of a fib on the small chart before we did it. So you really have to weigh out, what's at the areas that you're going short on all the charts. Is it a strong enough trigger line look to think that you're going to get another push to the downside? The other thing which is really beneficial is if you don't have any divergence on the low over here. Usually when there's no divergence, they make another push, and then they end up making divergence, and after they make divergence, you stop going short because we're at fibs, or relatively around fibs on the other chart. We talked about 50-50 in the NASDAQ video. Again, this is one of those 50-50 scenarios where, half of the triggers are above the blue fib and half are below the blue fib, which traditionally, if you have divergence on your small chart, you don't take a 50-50 trade. If you don't have it, you take it. If you do have it, you don't. That's the short version of it. So when you look at it in the real world, it looks like this. When you don't have divergence, you take it. And when you do have divergence, you don't take it. Does that make sense? Anyway, that's usually the difference, especially if you have two higher divergences, you're really not going to take it. So that's the difference in the 50-50 looks. Now, as we get back to our charts, you can see we broke out to the upside. And again, breaking out to the upside, this is the very first spot right here where we had mid bands inside of the triggers. So this is literally the only spot you could have bought right there for going up. And again, it was pretty much short-lived. Just never got going. And again, this is one of those ones where if you get in at the right spot, you're not risking a whole lot. You're only risking a couple ticks. That may just get you for a couple ticks because you don't necessarily want to get out because of a divergence when the triggers are outside. So, sometimes if it's just 3 or 4 ticks, I'll just let them come take it. Because the last thing you want to do is jump out right here and then it runs up and you're like, oh man, I should have just risked the 3 ticks. So again, you have to kind of weigh out your situation. Coming off of support and having lots of stuff over here, I'd probably end up just losing the few ticks. And then obviously we break down to the downside. Look, we end up putting in divergence, which is really good on the large chart. And it's not just divergence, it's divergence plus all the triggers break and roll over. And that's ideal for us on what we're looking for going short. And again, because it's not 50-50 in this situation, it's 100%. So even though we have a little divergence over here, it's not a 50-50. So you still take the short. Does that make sense? Because I know, in that last one, we had 50-50 triggers and we talked about no divergence, take a short, divergence, don't take a short. But you notice we had the blue fib here on the left side. On this trade short, so let me blow it up for you here. There's literally nothing in the way. Nothing. So we're anticipating to make it down to here at least on the large chart. So this small chart divergence doesn't really matter to us as much. We need it to kind of push us back up to our entry area. But then, obviously we anticipate further movement to the downside. So trend trade short here, another trend trade short here. And basically it just kept going down. So maybe one more trend trade short. I guess that one went up a little bit higher. Trying to see where that one was from. Not that one, sorry. Maybe one more there. And then we reach fibs over here at 91. So we're probably done, give or take. I would say, when we look at this is pretty weak triggers. At a fib, you probably won't take one more on the wrong side of your triggers over here. If you did, obviously it worked out really well. If you didn't, it's okay. There's always more trades coming. And again, I guess that was the trade of the day, right? All right, so now we make divergence on the low. Triggers are wide, so we start looking for long trades. And again, it's really the same pattern over and over and over. Divergent, strong triggers, look for longs. The only place to go long really was about right here. We had one-to-ones, we had pivot stop out, we had mid bands, we had fibs. We didn't even have the triggers yet. The triggers didn't even creep in until kind of closer over here. So if you were waiting for triggers, there was no support inside the triggers. So the support was up here. So you had to pay a little extra. Get in here and just hope for the best with everything going up. And the anticipation is that, when we have divergence and strong triggers going up, we're going to make it to at least the mid-band or fibs. So, these are our targets. And you can see it didn't even slow down there. So it just kept on breaking through. And anytime we break through resistance, we're totally cool with that. We know what to do, right? We're going to keep taking trend trade longs as long as nothing changes. And then after everything changes to the downside, again, we'll start thinking about trend trade shorts. So we didn't come from resistance. We didn't have divergence. So again, you can take a trade, but you're probably not going to get too much out of it. So, when we look at the smaller chart, I say not too much. That's probably not the right way to say it. Because if you look at the area where you could have gone short, 68.40 down to 68.10, there's plenty of money to be made there. That's $200 or $300. So lots of money to be made in between there. You just have to anticipate that these one-to-ones with this divergence and this fib are going to make that mid-band area hold on the larger chart. So, and you can see it did. We ended up with a 50-50 of the mid-band. Remember that 50-50 talk in both those other two videos? Half the triggers above, half the triggers below. And 50-50 generally will fail if the small chart says it will. So this circle down here at the bottom says that anything else to the short side is going to end up failing. And then as we progress forward, you know, the time where our large chart finally kicked into the upside is over here. And again, they really made this difficult. You can see how difficult that is. If you get in before it gets difficult, right, obviously this is your first initial entry area. You know, they went up some, and, you know, again, there was some opportunity to make a little bit of money, and, you know, they just kind of ran stops and then went back up again, which they are inclined to do every once in a while. When it gets choppy and doesn't really trend, they sometimes come back down. They'll stop at the lows, and, yeah, some people will take a second shot at it. Some people will wait for the next one. Just kind of depends on what your trading plan is. And then ultimately the large short was still up. And, you know, they came down and tested that area one more time with divergence. Wrong color box, but. And then we end up with one of these momentum looking trades where, you know, we really break through really quick with a lot of sharp upward small trigger action. And, you know, you buy a little pullback, and that's really your only chance. Not a lot of trend trade looks there. A little momentum look maybe, but not a trend trade look. And then that takes us up to resistance, divergence with resistance. So let's take a look at it going forward. And again, we're talking all the way. Again, I don't think this is too difficult of the imagination over here on the larger chart to say, hey, we had support. Because we had good support and plenty of room up to resistance. Again, we'll kind of look at this whole sequence here. So, again, look. Divergence. Came down here, stopped everybody out, hit support. Sharp move on the small triggers here. Sharp move over here. A little momentum trade to get you up to the edge. And that's about all she wrote. And then, you know, once we get a good edge, you know, and things start to roll over, we get the opportunity for a short trade, which is short-lived again. You know, anytime you run into these one-to-ones with divergence, it's tough if they don't make it through it. And then ultimately they bounced around and a lot of resistance, and they finally broke out of resistance going into the end of the day. So they kind of messed around, and there was one breakout towards the end, which that's about what it looked like. It wasn't really pretty. But with the large chart basically saying there's literally nothing you can do except go long. So maybe the first opportunity for trend trade long over here probably didn't survive a lower divergence pivot. And, you know, this is a good time to talk about the second chance, right? So if you got in here, one of the things that we talk about in our Discord and everything else is if all three triggers roll back up again. So let's say, hypothetically, you got in here, and then you got out because of lower divergence. The second chance for any one trend trade is when all three triggers roll back up again. So this is the spot where we had all three triggers rolling back up. If you were to take a second chance at the long trade, which I think the large chart dictated longs or nothing, this would be your second chance opportunity from the mid-band with the small triggers up, large triggers up, synthetic triggers up, large chart up. And that one ended up making a little bit of money as it traded up to the highs. So, quick recap of crude oil. I appreciate you guys listening.